Hello and welcome. Well, it's been a very strong quarter for Persistent Systems, and we have seen substantial growth. And in fact, when it comes to its headline numbers, that is the top line, bottom line, as well as the margins, they're well ahead of street expectations and the Bloomberg consensus. To take us through the quarter and what we can expect going forward, we have Dr. Anand Deshpande of Persistent Systems joining us. Dr. Deshpande, good morning, and thank you so much for joining us this morning. Let me just start off by the seasonality aspect of this quarter. We have seen strength come in when I compare this quarter compared to the last on a sequential basis. To what extent has seasonality played when it comes to growth this quarter?
Okay, so let me first give you an overview of the total numbers of $123.6 million in terms of the dollar revenue for the quarter and 834.28 crores in terms of the rupee revenue. Which is a 5.7% Q-on-Q on the dollar terms and 10.9% in terms of the rupee numbers. Now, if I were to look at specifically what happened in this particular quarter, one of the big good wins for us was the IBM reseller business, where we were able to get substantial business in Europe, and that contributed significantly to this quarter's growth. Now, to put a little bit of color on this particular business that we have started in January, we have added significantly to our European sales team, and we are doing reselling of some of the products that we have been working with at IBM in the market, and this one contributed a reasonable revenue stream for this particular quarter in this from the European business. So that's why you would see the European numbers actually going up as well. The IP numbers have gone up as a reason of this particular growth in this particular market. In terms of the seasonality, there is some seasonality that is associated with Q2, Q4 calendar, where our partners tend to have better quarters as compared to the other ones. So that certainly played a little bit into this market for this particular quarter. But I think overall we are seeing very good traction on both the pipeline for healthcare and also in the financial services area. So we do expect fairly strong growth in other markets and other businesses in the next few quarters.
Right. Dr. Deshpande, in the previous quarter, when we had spoken about business, you had suggested that there were certain licenses, planned license sales, which were pushed forward from the fourth quarter last year to the first quarter of this year. Can you tell us a little more about that and how that has panned out?
No, so some of the business that, it's kind of hard to say what exactly moved, but the growth in this quarter, a lot of it has been contributed by license sales that happened specifically in this particular quarter. So definitely some of those would have come in this quarter as well.
Dr. Deshpande,
but this is an ongoing process. We have some which will always keep shifting, and some new ones have to keep getting added, but you got to look at this business on a yearly basis rather than specifically on a quarterly basis.
Fair enough. So I understand that. So in the previous quarter, you'd also suggested that the legacy businesses from your existing customers will provide some challenges with respect to growth. Can you give us any update or details with respect to how Persistent Systems is now tackling this, and any updates where we can see this going forward?
Right. So over the last few quarters, as I have mentioned before, we are starting to see a robust pipeline in some of the newer lines of business, specifically around healthcare and financial services, where we are trying to sell differently in some sense. So instead of providing headcount for projects, we have made investments in technology solutions that are starting to generate returns. While this growth has been going on, there has been pressure on the existing projects where customers want us to either reduce costs or reduce the teams, specifically because the effort required for the same work is going down. So this is a balancing act on an ongoing basis. But what I'm very positive about, or what excites us, is the fact that there is enough newer business in the pipeline that is getting closed. And most of the new business that we are getting is not the staffing business, but it's definitely related to technology investments that we have made. So those investments should play well in the long term. They have a little bit of do a project, show me a point of view, show me a POC and then let's go implement on a stronger level. But these are typically how digital projects are going to keep happening. So there's what we call a flywheel effect. So you start small and you kind of build on it as you go along. So many of these will start small, but eventually they will sustain to large and reasonable business opportunities for us.
Right. So, Dr. Deshpande, from what I read when it comes to analyst reports is that, and they also corroborate the fact that you do have a very strong pipeline. My question then is that when it comes to addressing the strong pipeline, there are some estimates that a lot of it will be aided by inorganic growth. So can you tell us a little more about where can this bulk come through acquisitions, and how you're addressing the strong pipeline, or is Persistent Systems as it is good to go and deal with the strong pipeline that you have right now?
No, so most of the strong pipeline or the activities that we are doing, what I have referred to so far, are all organic growth opportunities. That said, we do have about $123 million or about 1,200 crores in the balance sheet as cash on hand. And we do plan to use some of it during this year to try to see if we can acquire certain companies or businesses that can help us grow the business. More specifically, there are three vectors in which we are looking at newer acquisitions, which would be smaller companies, but with a very specific focus in these three areas. So one is relating to industry segments, and more specifically, we are interested in the healthcare area, where we see a tremendous opportunity in terms of the market transforming and the positioning that we have had, especially with our partnership with hospital systems such as Partners Healthcare and other areas there. The second vector that we are focusing around is technology. In there, we see a lot of activity around data pipelines, warehousing, big data related data lakes, and then all of this leading into machine learning and being able to analyze data better. So the insights piece of our business, and we have invested in products such as Share Insights to help us go into that area. And the third vector, of course, we are looking at is to diversify in other geographies beyond the North American one. So we have, as you would have noticed, we have more than 83% of our revenues today come from North America, mainly the United States. And the plan is to see how to acquire businesses that give us a better footprint in Europe or in other parts of the world.
Right. Dr. Deshpande, just a couple more questions. Can you tell us a little more about Europe, because you've spoken briefly about it, about the kind of trends that you're witnessing there, the kind of conversations that you're having with clients in Europe at this point in time?
Correct. So, we are leveraging the industrial market in Europe to the partnership that we have with our largest customer. And that's really the focus that we are pushing in the European market. Most of this activity is related to the German, French, and the continental Europe, in addition to the UK areas, which are all the developed markets where Industry 4.0 is certainly a big area that people are working on. So our European investments have been predominantly in the sales side to start with. We have added certain capacity in Europe through the acquisition of parks that we made last year, and we are trying to strengthen that to grow our local footprint there. But by and large, the investments this time around have been start with sales, sell more, and then see how to deliver some of those activities. So that's starting to show some results this quarter. But I do expect through the year we will increase our European presence and our European business significantly.
Right, so and finally, so we continue to see softness in the accelerates, segment. Can you tell us a little more about what's going on here?
Correct. So, some of our existing businesses that we were involved in, which had which had an end of life planned in it, they reached a point where they were not profitable in terms of the cost and the revenue stream that we were getting in. So specifically that one we had regarding our cloud and other businesses, we have exited some of those, which have helped in doing some cost cutting along those. So I would think that these are the bottom numbers for the Accelerate business. We have some of the newer technologies, specifically around cloud sentient, which is the endpoint management, and also Share Insights, which is our analytics business. Hopefully they'll start to kick in and contribute to revenue growth in the Accelerate business. So see, again, this is a work in progress for us. There are many changes that are happening in the market. There are multiple areas in which we are focusing on. and it's hard to get all of them to fire at the same time. But hopefully, if we can get some balanced activity, you should see some growth from us in the next few quarters.